of emphasis. We've spoken to them earlier today. By the way, if you could just pull up a comparative, of the growth, what Emphasis did in comparison to the other tech companies, you'll see that they were lagging. Some of those tech companies, the stock price reaction didn't really come in line, but some of them surprised on the positive side. I think we could get a table up for you. Emphasis lagging its peers, and that's why, in fact, the stock is getting a harder knock. Well, Dipan Mehta is with us. Hi, Dipan. Thanks so much for joining in. Good afternoon, and wishing you, your family, a very, very happy Diwali. Let's focus on Midcap I.T, Dipan. Emphasis is a stock. The management joined us earlier today. They were sounding optimistic, but clearly the numbers are not reflecting that, and they're not able to go ahead and revise their margin guidance upwards as well. What's your take on Midcap I.T and this stock in particular?
Good afternoon. Thanks for having me on your show, and happy Diwali to you, entire staff of CNBC, and all the viewers. It's going to be a great year. I can just feel it in my bones. But I think Midcap IT is the way to play the software investment theme. And large cap IT, I think, will struggle to kind of maintain single double-digit type of growth rates. But especially Midcap IT, which is focused on specific verticals, niche offerings, IP-related, platform-related businesses, should do pretty well. And even Emphasis BFL, they're generally quite positive on. It may be having certain issues with clients, some delays here or there, but by and large, I think it's been a solid performer. And as I've always said, I think the best way to play would be through niche offerings, which companies are providing, likes of, say, Tata Elixir or KPIT Cummins or Persistent Systems. I think all of these three companies came with a very good set of numbers, maybe mildly disappointing to the analysts, but on a year-on-year, quarter-on-quarter basis, they delivered phenomenal numbers.
Dipan, hi, good afternoon. Any thoughts on indusind, which was one of those re-rating kind of candidates, right? The worst was behind and all of that. It's not been discussed too much, but I think what is perhaps worrying some is that on the liability side, looks like some deposits, maybe accounts were closed or whatever, but basically the savings account part was down about 6% on a quarter-on-quarter basis. Liabilities for indusind has been a problem a couple of years back as well, when we had all those issues. No one is saying it's that bad, but what would you do with it if you have it?
Yeah, Prashant, good afternoon. We own indusind shares as a matter of disclosure, and for many years as well, and a big disappointment post-ILFS crisis when a lot of value was destroyed. Then we have change of management, and thereafter, I think certainly the performance of the company and the stock price returns have certainly improved. And basically, there are certain chinks in the armor as far as indusind Bank is concerned. On the liability side, on the asset side as well, its focus is on microfinance and vehicle finance, which intrinsically is cyclical and not as risk-free as some of the other segments. But I'm not too perturbed on the liability side. I think the kind of environment which we are in and the kind of network which indusind Bank has got, I think that shouldn't be much of a problem. And what we noticed in September quarter could be a mere aberration. But indusind Bank is also all about re-rating of the price to earnings multiple. Historically, during the good old times, it was trading at a premium to HDFC Bank and ICICI Bank, and now it's trading at a discount. So there is some catch-up that can be expected over there. And by and large, I think the balance sheet is now pretty much clean, and they are poised for growth on the asset side, liability side. And I think it is perhaps entering a new growth phase. So I would remain invested in indusind Bank. But as I said, the top preference has to be for the likes of ICICI, Kotak, HDFC. I think from a risk-return profile, those are far better.